Yeah, well, I don't know about Dad, but that was Warren Zevon. Great song, by the way. Lawyers, Guns, and Money. Every time we see this market, it's pretty crazy. Yesterday, we posted a video on the performance of using multiple time frames on the Algo system with the signals in crude oil, and just thought I'd follow up with how did crude oil work in a very choppy, sloppy kind of activity day in crude oil. There were a few trades that were pretty decent, and it depends on when you have this started. My algo settings start crude oil at certain times. It doesn't take trades in the European session. Obviously, there's a start time after 6:30. And overall today, it did okay. Let's take a look here. On trading two contracts for the month, I mean, not every day is a winning day, but it's certainly performed quite well for an both algo system as well as for trading. Now, this again is a 5-minute chart, guys. This is a 5-minute time period with volatility in the current environment. What that means is we're going to get days that are better and we're going to get days that are worse. But it's nice to know that when someone has a question like, John, this algo method, is it like an automatic teller machine? No, it's not. It's not an automatic teller machine. But you know what it is? It's kind of like if you would take a trade and you're long and you look like this thing is a great setup. I mean, look at this. Pivot's great, the volume's great, stochastic's great, on balance volume's great, my even momentum histogram's great, and it looks like it's going to go to the races. Well, what if you didn't put a stop in the right spot? What if you didn't get out at all? What if your stop was underneath that low, right? This thing got out at pretty much a negligible risk and then reverses and goes short and then gets those stops that maybe had been someone else. If you notice, there's a blue line here and a blue line there. It scales out of half the position and then trails the balance. And so this, if you follow the path of what the Algo Optimizer can do, and again, while this went short and it got out of one and it got out of the balance of the other on a trailing stop feature, and then yes, the market chopped around and then took another leg lower. That's okay. We're going to miss those. I mean, it doesn't have insider trading, but it does reverse. It goes long. Chops around, went short, took a small loss, went long, and rode the thing. Looked like it was going to break out, went long, said, nope, don't you dare, get out. It's a loser. And then it went long and then scaled out, went short, and look what it did. It maxed out, and it held that short position until it could either trail the stop, hit a max function, or its holding period had maxed out. And again, we come into the close. And again, this is as we're trading currently Friday at 4:29 p.m. And just so that you know, this is live. Let's take a look. View data window, and you can see that here we are at the conclusion bar at 4:30, which is going to end any second here. We're at 4:29 and change. So anyway, this is kind of a very powerful tool for traders, whether you want to use this, again, automatically, indicator, and discretionary. What do I mean by that? You can have this fire off automatically. It'll warn you, do you wish to enter this trade, or do you want to just see the signals and enter your orders and pick and choose the ones you want to take? Many times, if you're like most people, unfortunately, we take the trades that look great, and then when you get a signal that says get out or it reverses and gets short, we don't. So that's why, automated trading systems are designed to do what you would do unobjectively, unemotionally, and it would execute the system. So we got to find out in a backtest study, are the signals valid, or are the settings valid for the period of volatility or price swings in which the market is under. Let's look at a couple other markets today, especially as we had a really kind of what could have been a disastrous sell-off day in the overall benchmark indices. I mean, we could have had a 1,000-point Dow day and we didn't. We could have had, with the NASDAQ and Apple collapsing, we could have had a really disastrous day. Let's take a look at how the system fared with other markets. This is the mini Dow today, and how do we know it's today? Well, let's review. Let me go over to, here we go, format view data window. Here we go. And you can clearly see same time frame at 420, and this is a 5-minute chart on the next bar, which would conclude at, again, 3:35 Central. The mini Dow is registering on TradeStation on its exchange time. Crude oil was it's Eastern Standard Time, so that would have been the difference there if you saw that. But let's take a look at what happened with today. It was kind of an interesting day. It went long. It got stopped out. It missed this trade. That's okay. It went long, stopped out, but it sure got the good fight. Went in, made some money, got in, and then finally caught a nice little leg to the downside. Currently, it's long 2 positions and will be out flat before the close. So this is a Friday trade. Equity today, it's been hovering. Let's take a look. And let's get to the performance page. All right, so if we go up here and click on the old dollar sign, you can clearly see today, while we could have had a bigger, better day if it went short and just stayed short all day long, I'm sure that would be one thing. But the neat thing is that when it does have a bad trade or it gets in on the wrong side, like it got on a long side, it looks like that's a nice little breakout anyway, and then it immediately gets out. So why didn't it reverse and go short? A couple functions. It may have had too much risk, because there is a function that says if the dollar amount per trade is too great, don't do the trade. So there is that function as well. It went long here. It looked like it was getting ready for a nice breakout to the upside. Guess what? It failed, and it said this time around the risk factor was within its parameters. It got short, and it got right in. Instead of going short in the hole and getting bounced out, it went long. It had a nice profit. It said, nope, get out. In fact, what's interesting is I had a friendly client walk in into the office, and I was showing him that the position was now net long right here in the lunch hour, and we found that to be interesting. And as we were talking, it's like, oh, wow, it just went short. And he's like, uh-oh, let me check things out. And I said, other indicators I have in the higher time frame and breadth of the market, this, it's not, again, as scary as it looks, it's not that scary. And here's why. Let's go and look at what I was talking about that I sent an email out today to clients. And, well, first, let's show you that email if you're interested. So what I was saying is, while the major index values, you can see this was sent out Friday at 12:53, excuse me. I was working on it at 12:30 because it took a little while to type all this stuff up. But here's the thing. What I was noticing on my indicators, it was real simple. While the index values were sharply lower, there's a conflict in trade signals within major subsectors and higher time weekly charts. What did I mean by that? All of these sector ETFs and index, like the Dow, which backed off its highs, the Russell, which was doing pretty good, IYZ junk bonds, insurers, coal stocks, peanut butter and jelly, which is food and beverage, OIH, oil service sector, SLX, steel, spiders, S&P. I mean, the list goes on, aerospace, materials, and you can see the rest down there, and it's the X factor, right? XLI, industrials, utilities, healthcare, and consumer discretionary, and metals and mining, and XOP, oil and gas exploration. They were all still in weekly buy mode. So it was a bad day, but it didn't flip the indicators to negative sell signal. And this is what I was referring to. The sectors and the stocks that were bad were already bad. They had been in a weekly sell mode. If you're a thinkorswimmer or if you have Genesis, you know that this stuff is biotech, the Qs, regional banks, airline stocks, builders, semiconductors, nat gas. Again, SHB is another peripheral builders, home builders, with the stocks that people would, after buy a house, would go to, like Bed Bath & Beyond, Sherwin-Williams Paint Company, etc., etc. Technology, XLP, and XRT all still remain on the weak side. So what was I looking at? Well, kind of funny is that the small cap Russell 2000 still is outperforming. I've done enough videos. You've probably listened to this till you're blue in the face about the Russell outperforming the market, and it did. It still went down, but relative to the Qs, the Russell was down 73 cents today, three quarters of a point, while the Qs were down 1.5%, which is a big difference. So anyway, this is what we were saying while technology is getting slammed, was starting to see a rotation and reduction of positions rather than a full-blown exodus out of stocks. And so it's not just from being a technician and looking at that, but it was also looking at the indicators. And let's take a look at some of those indicators, what I was reviewing as far as why and how did I send that to people. So if you look over here, this is a TradeStation radar screen. And if it's flashing, it gives me a warning sign of what might be. So if something, just briefly, if something was red, that means it had been in a sell mode. And if it starts blinking into or flashes and says now up, that's warning me that these are sectors or ETFs that I've got listed, sector ETFs, that are now flashing warning signs of performing into a buy mode. Green, if you're looking for some bullishness in the market, then green is good. If you look at, I'm just going to click on KIE, it was in flashing a buy mode and it came off the buy mode, so it didn't lock into a buy mode. What did? If you look at the basic materials, IYM, this is kind of interesting. Look at this. Last week had this orange candle, means it's a bona fide high close doji. This week we formed a PPS. It broke out of a downtrend. Basic materials, there's a lot of earnings coming out next week. If you're not too busy next week, then you're going to be, because it is a boatload of earnings. But anyway, looking at this, and then as well, one other sector that was a surprise that you would think would be beaten up. Let's scroll down and find the industrials, XLI. XLI forms an arrow. What does that arrow signify? It signifies a weekly buy signal. So while the day was bad and it looked horrible, the industrial sector itself started to see some upside. Also, aerospace and defense, the XAR. Now, if I change this and double-click on the symbol, we'll do it by symbol by alphabet soup. And where's my little alphabet here? Sorry to take your time. Time is important. There it is, XAR. Not what was I thinking? Aerospace and defense. Look at aerospace and defense. Big move to the upside. Generates a PPS. New highs in aerospace defense. So, yeah, Q's ugly. If long technology, not good. It's been in a weekly buy. Is it really ugly? It had a gravestone doji, number one, which means we kind of have a range in the market. Opened on the low, trades up and comes back and closes right back down. So there's that blue candle right there. Not very promising. We are in a sell mode. The market's kind of went down. But look at the overall pattern. It just didn't generate a buy signal. Now, this to me is just darn neutral. It's sideways. It's not really bullish, and it's not really bearish. It's just neutral. It's a trading or a trader's market. So that's what I see as far as that. And that's, I guess, to constitute or to reaffirm my statement. I don't see an exodus out of stocks. I saw a reduction of position possibly in certain spaces, as well as rotation. And one of the strongest rotations, again, if we go down the list, you'll probably see it not so much in what's generated buy signals, but also in net changes. All you have to do is say, well, what was positive on a day like today? I mean, everything was just ugly as the dickens. Everything was down almost 1%. There's every sector that we look at was almost negative, except for we got airline jets up 3 cents on the day. But this one right here, it's the insurers. And I tweeted that out yesterday. You guys probably saw that. And insurers next week, lots of earnings coming out. Regional banks was a little positive today. GBTC, which is the over-the-counter product for Bitcoin. If you guys were trading that with us last year, and this was before the CBOE came out with their futures, and then the CME came out with their futures. Our system has done pretty darn good with that. But in any event, I'm just going through and saying, gee, how bearish was this tape? And quite frankly, the stuff that was positive today, the green, look what it's on the weekly basis. It still wasn't all that great. And it was negative. Now, I'm not really into the solar energy as a trader per se actively, but I did notice that it was generating a high close doji. So if we go down the list here, man, there were a lot of good things that still we could come and walk away from this week rather than claim that it's time to sell short and it's the end of the world. In the materials, it wasn't just gold stocks. It wasn't just Freeport-McMoRan. There were other names, Mosaic, that were generating buy signals. Steel stocks, we got a few. Carpenter Steel, or Carpenter Technology. They have earnings next week. They've been positive. While all the steel sectors look bad, everything's formed a weekly buy signal. So that's the definition of a conflict of the daily looks bad and the weekly looks good. So I always rely on the weekly and the longer term trend rather than relative to the short term, and I hope you get a lot from this little video. Other than that, we come on down the pike here and look at regional banks and the insurers, which all fired off. A lot of the insurers were all firing off buy signals for today, whether it be Aetna, Allstate, Aetna, by the way, AET, beautiful little buy signal. Right here on a high close doji, a breakout nonetheless, and we did post that in a tweet yesterday. And again, for the week, this stuff is starting to see some improvement. Now, is it a sustainable trend or is it a trade? I'm thinking more trade than trend. AIG, we posted that yesterday, and it had a breakout. It was positive. It's kind of ironic. You want to kind of follow stuff that has been down and beaten down to the dickens. The relative strength here has improved. It's on decent, the volume's improving. And a stock that goes up when the overall market goes down, you want to kind of follow that and watch that over the course of the next day or two to make sure that it isn't just a one-day wonder or a one-week wonder, that it actually is a sustainable trade and we could see some further gains in some of these names. So anyway, enough said. Thanks for watching, and I hope you got something out of this little video update on what the positions did, how it's trading on the Algo optimizer. I know that we had several emails and some calls on this product. Still, there are a few licenses, and if you are interested, simply call our office, or as you're watching this YouTube video, just check around on the website where it has the Algo optimizer. Thanks, everybody, and have a wonderful weekend.